All right. Good morning, fellow traders, and welcome to today's live trading session. As you know, today is May 4th, 2022. And of course, today is a big day in regards to announcements. I know Myra may touch on that later. But what we're we're going to do what we normally do. We're not going to keep you guys for too long for today. We may shorten this meeting up a little bit, mainly due to the fact that later on today we have an important announcement, and that may change things up a bit. But with that said, let's look at what we're seeing right now. And before I begin, let me first say that I only have a few setups. Where really maybe 2 or 3 setups, day trading opportunities. I really didn't find too many. Mainly due to the fact that it appeared as if a lot of the pairs, a lot of what we were trying to look for, they were sort of, there was some level of uncertainty with the different currency pairs that we were looking at. So right now I only have 3 that I'm looking at, and 2, well, really only 1 that I'm really more confident in, even though I'm not really as confident due to some reasons I want to share in a little bit. But I'm still going to share with you those setups, and then from there you can decide what you want to do. So all right, I guess we got that out of the way. And I don't think you guys can hear the TV in the background. I got the TV on in the background, but just in case you guys do hear some noise. But all right, so with that said, let's move forward. So then the first pair we're going to look at right now is the Aussie Swiss franc. So as you guys know, based on well, let me ask you this question. Based on what we're seeing right now, what should we be looking to do? Should we be looking to buy or sell based on how price is moving right now? So I'll give you guys a few seconds to chime in and submit your response. But Ryan said buy, Rob said buy at support, Dan said buy, Greg said buy, and yes, all of you are correct. We'll be looking to buy based on what we're seeing right now, of course, based on what we observe on the 1 hour time frame. What we do see, we see momentum to the upside. We see price making higher high, higher low, higher high, higher low, and another higher high right there. So then, we're in a bullish environment right now on the 1 hour chart. But before we decide to commit to a buy on a pullback, we first have to see if there is something that we call directional confluence. Now, some of you guys been with us for a while, so then you should know these steps. We go over the same steps over and over and over again every single day when it comes to this particular method of finding trading opportunities. Remember, this method is primarily a momentum-based method, which means we're just looking at how momentum is in a particular move, whether price is impulsing in a particular direction. And if we do find that, then we'll definitely look for an opportunity on a pullback, even though there's a little bit more involved in that. Because just because the price is impulsing doesn't mean anything. For all we know, price could be in the midst of a reversal. So we have to be aware of that as well. But anyways, let's look at multiple time frames. When it comes to directional confluence, what we want to do is look at multiple time frames to see if price is supporting a bias to the upside. So then on Aussie Swiss franc, we see that bias to the upside on the 1 hour. On the 4 hour, we see that the bias is still to the upside. 20 SMA sloping upwards, and let's do the daily. Daily, it's still to the upside. Well, not really. It's sort of neutral. It's kind of hard to tell, even though we have this nice strong correction right here. It's still sort of neutral, even on the daily chart. But the very fact that we see a bullish bias on the 1 hour and 4 hour is all that you need in order to consider entering this potential buy opportunity. Now, one thing I do want to point out is that on the 4 hour chart, if you look left, we can see that we're hitting structure. Look left, structure leaves clues. Right around here, this whole section right here is an area of structure resistance. So there's reasons to not really enter this trade, because we know that, whenever price hit this area, we saw price react to it. It hit it right here, reacted nicely to it, hit it right here, reacted nicely to it. And we can see the first time it came and tested this area right here, reacted strongly to it with a nice deeper, correction before price actually went up again. So it's testing the same area again. There's a possibility we may see price correct lower, just like we've seen in other occasions. So, we got to pay attention to that particular footprint, that repeatable pattern that we're seeing on this chart, and the possibility for price to, respond to this area, which is really 4-hour structure resistance. So, we just have to be a little bit cautious, but let's just assume that, we're going to go for this setup, even though it's risky. If we do decide to enter this setup, then we definitely want to take partial profit right around the highs, or at least take all of our profit near the highs or somewhere in this zone right here, because this area is an area of it's a common zone of resistance. We see a historical pattern. Whenever price reaches this area, we saw price react to it, even though there's a possibility that price could break through and violate this particular area. We still want to play it safe. So anyways, let's just plan for this particular setup. So then we know that price is creating higher highs, higher lows. And what we can do is plan for that. And the first thing we could do is identify where support would be, or where structure would be. In other words, if we were to enter this trade, where would we want to enter this trade at? And, there's a number of things that we can point out. For starters, we can look at this area of structure right around here. Look left, structure leaves clues. We can see that right here, this area acted as resistance here. It acted as resistance right here, and it acted as resistance right here. So then, we have multiple occasions where this level or this zone was respected. So then, we definitely want to pay attention to that. Now, one other thing that I'm going to do is I'm just going to drop down to the 15-minute to see what we see on this leg upwards. And as you can see on this leg upward, we do see this area of this cluster area right here. So what I'm going to do, I'm just going to draw it from this low, right here. Let me just draw it out for you. I'll change the colors later, but from here all the way maybe to the midpoint of this cluster area, right around here. So let me change the color. I have it this color for now, but let me go back to the 1 hour. Okay, so somewhere within this zone right here is where I think price could go. And that's what we're going to plan for. We're going to look for a nice correction down into this area. And then from there, we'll look for bullish confirmation, of course. And we'll trade this to the upside. And, I'm in favor of probably closing out completely once price reaches the highs around here. So then we can have a TP right around this area right here. Let me change the color. Right around here. This could be our TP, our TP1 if you want to, and then we can have a TP2 extended. But to play it safe, it may be best just to close out your entire position right around these highs up here, because we don't know. Price could be in the midst of a rotation, and we may get a retest, because I don't know if you guys knew this. Well, there's a chartist, an expert called Al Brooks, and he's looked at these charts hundreds of thousands of times, done a lot of analysis. He writes all these price action books, but he mentioned that about 70 to 80% of the time, whenever price hits resistance, it'll eventually make a retest of this resistance, and then before it actually slides lower. So about 70 to 80% of the time you expect for price to, whenever it hits a key area of resistance, you expect to see some sort of topping or consolidation or a retest of the highs. So, that's something for you to know, because, when trading, you'll see that happen a lot. You'll see price encounter an area of resistance, but there's a lot of momentum in the upward direction. Sometimes the best thing to do is just to wait for a pullback to an area of support, then execute your buy, and then take profit near the highs. That's the best thing to do, just to play it safe. But that's what we're going to do in this example. We're going to wait for price to come to us. We're not going to chase a trade. We're going to wait for the trade to come to us and hopefully hit this level or area. But starting or moving forward, what we can do is draw in our Fibonacci from this low all the way up to this high right here. We have our 38.2 right here. Price is almost hitting the 38.2. And, as soon as price hits the 38.2, that's when you could really drop down to your trigger time frame, which is what? For those who know, what is your trigger time frame? I know we go over this over and over and over again, but it's very key. It's very important. What is your trigger time frame? So, and there's multiple answers to this question. Yep, 15-minute or 10-minute. Exactly. 15-minute, 10-minute. And in some occasions, it could be 5-minute, depending on the velocity of that pullback. But for now, what we're going to do is simply go to the 15-minute for our trigger whenever that level is hit, which will be soon. But from there, we want to see a three-way pullback, because as you guys know, for most corrections, you typically see a three-way pullback. Not all the time, but the majority of the time we do. Like over 70% of the time, you do see a three-way pullback. Let me just say that. So, like, for instance, in this case right here, let me see. I never did check this, but let's see if there is a three-way pullback right here. Let me drop down to, let's do the 10-minute in this case. And we do see it, right? We see that three-way pullback. You guys see it? You see leg A, leg B, and leg C. And then from there, that's when price blasted to the upside or expanded strongly to the upside. But on most occasions, you're going to see a three-way pullback. It may not always look the same each time, but trust me, most of the time you're going to see that three-way pullback. And that's the reason why we respect it. Even though there are times when, price doesn't give us that three-way correction and it ends up expanding in the direction of the trade, or in the direction that we wanted it to go, or we were expecting price to go. But yeah, that's what we typically want to see, is that three-way correction. So then what I'm going to do is pass the mic over to Marvin. I think he has something he may want to share in regards to this setup, and then we can go from there.
Yeah, it's not going to be much. I was just going to pretty much talk about how on Monday we did get the RBA to announce what they were going to do, and they actually went forward and did really surprise the market and did more than what was already sort of baked in. Before the RBA meeting on Monday night, which is the Asia session, really is early Tuesday morning in Forex terms, but there was the expectation, based on swap markets, that we will only see a 15 basis point rate hike from the Reserve Bank of Australia. And that was even in question because this is an election month. They have their general elections on May 21st. And analysts didn't think they would have the guts to go ahead and hike rates ahead of such a major, election that's coming up. But they eventually did. They felt like it was important enough for them to address some of the inflation concerns, considering what's happening with China, with the slowdown and lockdowns there. They knew they had to, move, fast and move ahead, despite not seeing wage growth there pick up. Because you remember the RBA had always mentioned that they have to see wages pick up, wage growth, earnings pick up before they even consider hiking rates. So even before wage growth picked up, they still, they went forward and hiked by 25 basis points, which was a surprise. And that's the reason why we've been seeing the Australian dollar rally since then. So even when you look at the Aussie Swiss franc pair, it's benefiting from that policy divergence. We know that The Reserve Bank of Australia just kicked off their rate hiking cycle. And we know that the Swiss National Bank, they're choosing to remain, negative, keep a low interest rate because of course it's a safe haven currency. um that's how they want to sort of position themselves. So then there's policy divergence, there's interest rate differentials that's helping to pin up the Australian dollar versus Swiss franc. So then looking for a buy opportunity at support is the key idea, the most preferred idea for this pair, considering that it's in a rally at the moment. So yeah, that's kind of what I wanted to point out. I just wanted to connect it to what we discussed on Monday with the Reserve Bank of Australia monetary policy announcement. So those higher interest rates, the higher official cash rate on the Australian dollars, helping to underpin the Aussie Swiss franc pair.
Yeah. So yeah, we'll be looking for, of course, a buy at this zone due to that. Like I know Marvin gave, a fundamental understanding of why these currencies are moving the way they are. And, we did have that RBA announcement, interest rate decision. So yeah, that helps. But yeah, I think Marvin may want to share something.
Oh
Right quick.
no, it's not important. I was just going to make us, just a breaking news that the ADP report, the U.S. ADP, which is of course the jobs precursor for the non-farms, just reported that they added 247,000 jobs to the labor market. So then, of course, we should possibly see some moves in the dollar, even though the dollar may want to remain neutral ahead of today's FOMC or Fed monetary policy announcement and rate hike announcement. So, but yeah, I just kind of wanted to break in and just, talk about that. But yeah, Melvin, you can continue and go for it.
So then, yeah, as you guys said, what we typically want to see is a, solid correction and then confirmation on a trigger time frame before we pull the trigger. So let's go down to, let's do the 15 minute. Okay, this is the 15 minute. And let me ask you guys this question. Should we stay on this time frame or should we drop down to a lower time frame, like the 10 minute for our trigger? I'll give you guys a second to maybe chime in. Boom, 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 boom. All right. Yep. Okay. Yep. Rob said a lower time frame. Yep. So then let's go to the 10 minute. Let's see how things are looking on the 10 minute. Okay. So yeah, this is possible with the 10 minute. Let me, for one, let me do this. So I believe this is where we were. We do our Fibonacci. Okay, we're almost here. So typically when it touches the 38.2, that's when we want to look to see, okay, what time frame will we use? Even for this one right here, I mean, you could use it, but let me see how things are looking on a 5 minute. Okay, so yeah, this is the 5 minute chart right here. And yeah. All right. Yeah. So this is what I'm thinking. Okay, this will be leg A, and then we're gonna have a leg B, and then leg C extension down here. Something like that, I think, may be forming or may want to form. So yeah, just be on the lookout for this one. But in either case, we can wait for price to reach this area right here. So then what I'm going to do, just for the sake of just being notified a little bit early, let me add a price alert right around here at 64.80, like right around here at 64.80, even though there's a possibility. But let me do something like this. Let me go from here to here. Boom. Let me do the midpoint of this area right there. That'll take us somewhere in this congestion area. But let me just do this. Let me just place a price alert at 69.80, right around here, which is a little bit before we get to our zone right here, but it's still considered structure area. Let me just do 69.80. Plus, for those who may not know, 69.80 is considered a strong number level. So then that's something to bear in mind. But we got, okay, crossing 69.80. Today's date is the 4th. So let me do May 4th. Price is near or testing on our struck support. And we can say if three-way pattern, look to buy on confirm. All right, and then we say target highs, because remember, for this one we want to play safe, or at least have two targets. Target highs, or have two targets, or TP1 and a TP2. But all right, so yeah, I'm just going to place this right here, and we'll see what happens once price gets to this particular area. But yeah, and then from there we'll look for an opportunity to buy. All right, so let me get this out of the way as well, or let me just hide this. Let me hide the visibility on the daily and 1 hour time frame. Let me keep this 15. Well, we'll do 59. All right. All right. So yeah, are there any questions about this one, Aussie Swiss franc, before we move on? Going once, going twice. All right. So okay, so the next pair that we're going to look at, since we don't have any questions, the next pair we're going to look at right now is one that I'm sort of iffy on. I'm on the fence on. Is the Euro Swiss franc. So let's go there right now. The Euro Swiss franc, and we're on the 1 hour, and it looks like it's popping up right now. But this is what we're going to do. We were going to, of course, we saw this impulse, then price. We wanted to see price correct, and then of course, see bullish confirmation, and then trade that move to the upside. But it looks like price is already moving in that direction, even though there's a possibility that we could see price we could see price respect the highs and then pull back for a deeper correction, maybe to this trend line. We don't know. But what I want to do before we do anything, we already know that price is making higher highs and higher lows. That's pretty apparent. Higher high, higher low, higher high, higher low, higher high. So we already see that. So of course, that's something that we'll definitely keep in play. Let me make this only visible on the 1 hour. I'm just going to keep this here. Just a minute, 1 hour. And let me just do from 1 hour to 2 hours. Keep this visible. All right. So then let's drop down to the 4 hour, or move up to the 4 hour to see if there's a bullish bias. On the 1 hour, we already see it's a bullish bias and making higher highs, higher lows. Let's see if the same thing is happening on the 4 hour. All right. So yeah, 4 hours looking bullish, 20 SMA sloping upwards. So bullish bias on the 4 hour. What about on the daily? Daily has a bullish bias as well. And as a matter of fact, it's forming what type of pattern? What type of classical chart pattern is forming in this entire area right here? Let me just see if you guys can see it on your end. You guys may not be able to see it, but if you guys can see it, then you can chime in and tell me what you see. But we do see a classical setup right around this particular area right here. Okay, yep. So Adam said inverted head and shoulders. Yep, you're correct. We see left shoulder, head, and right shoulder right here, and price expanding to the upside. And of course, it's finding, or right now it's testing this 100-day moving average, which is a key moving average area. Oftentimes it acts as dynamic resistance, as we can see in the past. Whenever price hits this area, we typically see a response. Let me, I don't know what I just did. Let me go back. But yeah, we typically see a response to this orange line, which is the 100-day moving average. But price is testing this moving average right now. So then, what we can do is, of course, bear in mind that it's testing this area. Doesn't mean that we should avoid entering our trade. Absolutely not. We can still look for an opportunity to buy, but I'm still a little bit cautious on this one. But we do have this inverted head and shoulders type setup that could actually give us a clue on where price could potentially go, which is either to the highs up here or even beyond that. So then I'm just going to keep note of that. But anyways, going back to the 1 hour chart, what we clearly see is that price is bullish right now, and we need to identify structure resistance. We need to identify an area where price can correct down to, and then from there look for a buy. So there's a number of things we can do. For starters, what I want to do also is share with you something that we've seen happen multiple times when it came to this pair. Oftentimes price will move in these repeatable patterns. So then we look at this correction right here, right? You go to this correction right here, and we see that price corrected and popped higher. Oftentimes price will do something that we would like to call a measured correction, where it will correct the same distance as a previous correction and then pop higher. Just like in this second correction, price corrected pretty much the same distance as this initial one, and then we saw price pop to the upside. We saw that. But let me move this right here. We saw that measured correction, or something that we call a measured pullback. And we can see the same thing right here. We see sort of like almost a similar pullback, but it's the same zone, same vicinity, you can say. But let's just make this one a little bit, move this up a little bit, and let's just assume that price gives us a similar pullback as what we saw previously. On these 3 occasions, it was similar pullbacks as what we saw before. And there's a reason for it. For starters, what we could do is clone this line. For some reason, I don't know why this feature is not working. I'm not sure why it's not working, but what we can clearly see here is that price is moving or channeling to the upside right here in this ascending channel. Price is traversing back and forth between this ascending channel resistance and ascending channel support. Therefore, there's a possibility we could see price do what it's done before, which is retrace all the way back down to support again. And, from there, we could look for a potential buy. So then that's something that can happen as well. We have to be aware of that type of pullback, because that is something that could really, really happen for the Euro Swiss franc pair. So if this does happen, then what we can do is look for a buy and just target the highs up here just to play it safe. We'll just target the highs right here just to play it safe. But if you want to, you can shoot for an extended target, which should give you something in this area, maybe right before 1.0350, this area.
But that would be something that I would look for. But again, if we were to enter this buy, we could take two targets. Target one could be somewhere around here, and target two could be, let's say, somewhere up here. Two targets. But yes, price is creating this ascending channel. It may be wise to wait for that repeatable pattern to happen, because it happened in 3 other occasions where we saw price give us that nice correction. Right here, that's case 1. You know, right here, case 2, and right here, 3. So then we can expect a similar pattern in the very near future. All right. So yeah, are there any questions about this setup? Euro Swiss franc. Going once. Going twice. Okay. And also one thing I want to point out too, before we move on, just in case this does happen, we got to be prepared for whatever happens. We also see that we have this area of sideways price action or structure. So right around here, which really coincides with this area anyways, you know, we can expect price to come somewhere down into this zone, this area, and then bounce to the upside. So then that's something that we should definitely look for as well. So, you know, and I got a feeling we may see something like that, where price corrects all the way down here to this zone right here, and then we could look for a nice buy opportunity. And this is perfect because right around here we have institutional. Well, I should have asked you guys that question. But right around here at 1.03 or $1.03, we have this institutional level. So yeah, there's a possibility that price could come push all the way down to this area and then pop from there. So yeah, we'll be prepared for whatever happens. You know, even if you draw your Fibonacci, I believe that should be a 61.8% retracement. This 50 to 61.8 on this zone. But yeah, we do have a 61.8 right here, and 50s up here. But yeah, in either case, we'll be looking for a correction somewhere within the zone. That's where I think it's going to happen. And then we can look for a potential buy on bullish confirmation only. We need to wait for bullish confirmation before we decide to get involved. And sometimes we get it and sometimes we don't. Like for instance, in this last case right here, did we get bullish confirmation? Probably not. You know, but on this one, it looks like we did. On this one, it looks like we did. As far as this pullback, on this pullback, it looks like we got bullish confirmation. If you was to drop down to a trigger time frame, but for this one right here, I don't know if we did get bullish confirmation. And sometimes you won't see it, but you know, sometimes you got to just move on. Let me see if we did get it. Let me drop down to the 15-minute, and right here. Yes and no. Yeah, this one would have been, you know, a bit more tougher. Okay, yeah, here is interesting. Here's the line right here. It's on a 15-minute chart, but it didn't show on the other time frames. Let me remove it. And I believe we have to remove this one too. All right. But yeah, so yeah, in this case, like I don't want to confuse you guys anymore, but yeah, it would have been a little bit harder to get involved in this one. There's other things you could do, but I'm not going to share that right now due to the sake of time, and I don't want to make it too complex for you guys. But yeah, for that one, for this impulse, we didn't really see the bullish confirmation that we normally like to see, but on this one, we did. And I'm not going to go into the details on why. That's a little bit more complex, but yeah. So all right.
But yeah, with that said, I guess what we can do right now is move on. I think that's it for now, even though I have one more. But I think that's all that I'm going to share with you guys in regards to day trading setups for now. So then what we're going to do, we're going to pass the mic on to Marvin. He's going to talk about what's been happening fundamentally and maybe touch on even today's announcement, which will come around 1 p.m. Central Time. So I'm going to give Marvin the mic, and he's going to talk about it right now.
Yeah. So most of you guys should know this, but for those that don't, you guys know that today is Fed Day, or the FOMC day, where we're going to pretty much get an update or an announcement from the Federal Reserve Bank on what they plan to do with interest rates to sort of help fight back inflation that we've been witnessing for the past few months. We know that inflation, if you want to look at a general, headline figure, it's floating around 8% in real terms. So then, the central bank is going to have to step in. And I think the market is sort of forcing them to step in. Even when you do look at implied rates, which we will go to in a little bit, we see that, happening, that the market has already priced in about 10 rate hikes this year, which is quite aggressive and interesting. And I've never seen that in all my years of trading. I've never seen the Fed actually front load on the market and price in that much rate hikes, for a rate hiking cycle. So then we're going to touch on that in a little bit. But just like I said, the market is anticipating. We looked at the Fed funds, CME Fed Watch. This is Chicago Mercantile Exchange. We looked at that on our last webinar. And for those that weren't with us, we know that there's pretty much, look at this update. There's a 97.9% chance that we'll get a 50 basis point rate hike up to 75 to 100 range. So then pretty much we know there's going to be a rate hike, 100 rate hike. But what's interesting, and the reason why I was kind of shocked was because on Monday we didn't see any percentage. Right now it's like 2.1% of us seeing maybe a 75 basis point rate hike, because that has sort of been the question that's been ringing in analysts' ears for the past few days. There's been talks of there being a 75 basis point rate hike. And if we don't get one today, since the market has sort of already discounted for and priced in 50 basis points rate hike, you may see that for the next monetary policy meeting in June and beyond. So there is a case building for the Fed to really try to catch up on them being behind the curve. So, we know that the current Fed funds rate is at 25 to 50 basis points. And right now, most of the market, this is just pretty much your standard hedge funds, just those that participate in the futures market. They're anticipating or expecting that the Fed at this meeting, the May 4th meeting, they're going to raise rates by 50 basis points. So the current target range, or the Fed funds target range, because if you don't know, like, the interest rate for the US dollar is not just one single percentage, it's actually a range. The Fed tries to target a range within it. So it's going to be pretty much, the market is anticipating or implying that rates are going to be raised to 0.75% to 1%. So then that's the probability is 98% probability of that. And there's a very, very, very slight chance that we'll see a 75 basis point rate hike. But you can see that over a month ago, it was only at 75%. We could see that, how quickly rates have been moving to the upside and how things have changed within a matter of months. But yeah, that's something that we can expect, a 50 basis point rate hike, and that has already been baked into the market. So in some ways, we know that the Federal Reserve Bank is going to do that. They're going to hike rates. So then really the rate hike announcement is not really the main focus for traders and analysts, we already know what the Fed is going to do. They're going to hike rates by 50 basis points, or that's pretty much been already baked in. So then they would really have to surprise us and do something so beyond what we had even anticipated to get some type of response or reaction in the market. So the fact that this 50 basis point is 98% already priced in, or a good probability of happening, then today's announcement may not be, it may not carry I'm trying to figure. It may be a non-event, is what I'm saying. It may not really do anything to really create a surge in volatility or a strong move, in the dollar, simply because it's already been baked in and discounted in the market. So then we see that it's 98% rate hike, and we know that the Fed, they don't want to ruin their credibility, um, because of course they've campaigned and marketed themselves as being transparent and credible. So for the sake of ruining credibility, they're going to stick with the 50 basis point rate hike, even if they do see signs of things causing a slight alteration or a shift in their perspective. But yeah, we see this. So then, what I want to talk about right now, but for one, I want to bring up how it's important that before the Fed announcement, what we want to do, we know that they're going to raise and hike rates by 50 basis points. That's the consensus. So then what we want to do, we want to look at the pre-positioning of assets before that announcement. What is stocks doing? What is the dollar doing? So then right now we're going to look at the VIX. What is the VIX doing? Because the VIX, which is sort of our volatility gauge and sort of allows us to see how hedged the markets are for risk, that can give us an idea on, the current view and the sentiment, and also what traders are doing at the moment. So then right now I'm going to pull up just the typical VIX, the standard S&P 500 VIX, and we're going to go to the daily chart. But as you guys can see, the VIX has been sliding lower. It's not open yet. It's going to open in a little bit, but we can see here, no, it's going to close in a little bit. It is open, right now, but we can see here that it's softening. It's been softening from the 30 level. Let me just do this right quick. It's below 30. This level right here, or an area where we have to be, sort of concerned, because that's when markets are highly hedged to sort of diversify into an asset that doesn't carry as much risk. But we can see here that we didn't see as much buying of this insurance or as much hedging in the VIX. Let me just turn this to, right now we're seeing an unwinding of this highly hedged position among traders. But as you can see, ever since late March, we've been seeing investors pile on in the VIX. They've been sort of hedging themselves. And if we pull up, let's pull up the S&P 500. Let's do this right here. Let's do SPX here. But as you can see, ever since late March, early April, we began to see traders, investors purchase the VIX. They began to actually try to hedge themselves and increase their hedged position against risk. And as you can see, as they began to buy the VIX, we began to see this particular thing, this S&P 500 slide down. So we can see that there's this inverse correlation between risk, volatility, and the movement or direction of the S&P. So as this formed the bottom, and as investors began to buy this insurance, we began to see this tank lower. So then, that's what's happening. But as you can see right now, we're seeing the VIX pull back. It's actually below 30. So we're seeing an unwinding of that riskier position. So then could this be an indication that there's a possibility that the Fed, it could be anything, but one thing we do know is that right now we're seeing risk assets sort of trading to the upside for the session ahead of this announcement. If we look at our S&P E-mini futures right here, we can see that they're actually well, let me just go to the daily so we can see, the daily, but we can see that it's positive for today. It doesn't mean that it won't close negative, but at the moment we're seeing, E-mini futures support it, and that's primarily due to maybe, traders, you know, unwinding their highly hedged positions because they see something coming down the pike. And what they could be seeing or could be fearing is the possibility of slowing growth coming into the market. So then that's what pretty much traders are doing. We're seeing this unwinding of the VIX, unwinding of this hedge position, which is supportive for risk assets. And we see, of course, this E-mini futures move to the upside. And if we look at, let's go to our VIX real quick. Let's just go to FinViz so we can take a look at it real quickly. You can see here that our heat map on our futures heat map is showing these US future indices actually moving higher, slightly moving higher, positive, even on a day where there's so much risk event in the risk events in the market, because we not only have just the Fed statement, which is really the most important statement this week. I think after this announcement, we may start to see some normal price action. Lately, we've been seeing this push and pull dynamic in risk assets, where of course they'll be trading in one direction for one part of the day, and then you'll rally and move in the opposite direction for another part of the day. And we've been seeing that for most of the week. And even if we was to look at the dollar, let me do this real quick. Let's just go to the Dixie real quick. I think we can see this. We can see that even for the Dixie, which is the dollar index, this is just a weighted index for the US dollar. But we can see here that for the past few sessions, it's been really trapped in a range for the past few days. We haven't seen it move to the upside. But if you look at the impressive rally in the dollar, you can understand why it needed to sort of consolidate and sort of ease its climb higher, especially during the week when there's a lot of event risk, like the Fed, rate hike announcement. So then we've been seeing the dollar sort of softening right now. The pre-positioning of the dollar is softer for today, which is really positive for risk assets. But if we look, we see that the VIX is below 30. This is the VIX futures is at 28.65, and we're seeing oil pick up to the upside. We're seeing some of the metals, some of the commodities, a good portion of them, especially on the softer side, move to the upside as well, except for gold and silver. We're seeing these precious metals sort of, still negative, and that could be due to some demand destruction that we're seeing, and just some other factors. But we can see this in our VIX. I mean, in this futures heat map, that assets are moving to the upside, and it could be an indication that analysts are expecting the Fed, possibly during their post-announcement press conference, to sort of dial down and scale back their hawkishness. They've been aggressively hawkish, and there's a possibility we may see that. And this is especially the case if we do see our US services PMI data come out soft. Now, let me just go to the calendar real quick, the economic calendar. Let's just go to investing.com. Let's do that. And let's go to the economic calendar, because on Monday we had the ISM manufacturing PMI numbers, come out. And we saw that even though it reported expansion territory, we saw that it underwhelmed expectations, and we began to see some softening in both inventories and new orders for the ISM manufacturing PMI, which is really a growth indicator. When you look at the PMI data, it's really reflective of more of the growth side rather than the price stability side or inflation side. So then in this case, for today, the second most important announcement, especially on the US docket, would be the US ISM manufacturing data that comes out later on, 10 a.m. Eastern, 9 a.m. Central. where we have the non-manufacturing data. And the reason why we want to pay attention to this is because the US economy is a services-based economy. And this is going to definitely play a huge part in the growth equation in GDP. We look at the PMI data to get an idea of where GDP and where growth is going to go. So then if we look at here, we see that the ISM Services PMI is expected to come out higher than what it was in the previous month at 58.5, which is expansion territory. But if we see it come out lower than this, and if we see that the different subcomponents of this report, like the employment component, the new orders and inventories, you know, business activity, if it comes out lower than anticipated, then this is definitely going to factor in, or it cause traders or even analysts to suspect that, okay, are we seeing some softening coming in? Has the markets overrun and sort of over tightened in an organic way? And would the Fed need to scale back some? So then, of course, we're going to be paying attention to this ahead of the announcement. And most likely the Fed already has this data. It's hard to believe that they're going to actually release a statement ahead of having this important data. And they may already have the non-farms data that's going to be released on Friday as well. We just don't have it, but they may have it already. So then, depending on how this number comes out, that's going to definitely impact pre-positioning in the dollar and even pre-positioning in the VIX. We may see things escalate further, and we may see further upside in risk assets if the Federal Reserve Bank dials down their hawkishness because they're seeing signs of slowing growth come into the market. So let me go back to here, and let's talk about if there is slowing growth. If there are signs of slowing growth in the US economy, then does it make sense for the Federal Reserve Bank to hike 10 times? So as you can see right here, this is the Fed Funds Futures contract for this year up to December 2022. And this purple area is where the current Fed funds rate is, between 0.25% and 0.5%. We've already, hiked one time, but right now, what we see right here, we see that the market is pricing in 10 hikes this year, 10 hikes, which is quite aggressive. And that's a lot to do, especially since we're in May. And that's the reason why they're doubling up. And instead of doing the standard 25 basis point rate hikes, they're now doing 50 basis point rate hikes. And they would have to move this. If things continue as usual, they would have to move this from, if they go by 50 basis points, if they hike rates today by 50 points, that will move the Fed funds range 2 levels up to here, from 0.75% to 1%. That would be where the current interest rate is, or Fed funds rate for the dollar. But as you can see right here, if the market has already front loaded on rate hikes, you remember the Fed is behind the curve. If anything, we should have seen this type of rate hike move. What the market signaled it back in January 2022. So that was like 4 months ago. About 4 months ago that, we're 4 months, or the Fed is 4 months behind the curve, that they should have hiked rates up. The interest rate should have been in this zone by January of 2022, but we see that it's not. We see that it's still down here. So if we do see signs of slowing growth in the economy, does it make sense for the Fed to hike rates 10 times and actually exacerbate the slowing growth? Because you remember, when the Fed hikes rates, that's going to actually contribute to slowing down the economy. If they do it too aggressively, that can send the economy into a type of recession, to some type of deceleration, because that's what happens when you hike rates. We see this deceleration. But because the market has been engaging in this organic tightening, could the Fed, to their advantage, could they not have to hike rates 10 times this year, simply because the market has already done it for them? This is what the market has already done. there's been this organic tightening and this organic raising of rates in the market. And could this, could the Fed's verbal intervention and how they've presented their forward guidance, could that have been the organic tightening that was sort of used, that's needed to help reel in inflation without the Fed having to hike rates themselves? Because it's kind of hard to believe that they're going to continue to hike rates and even engage in quantitative tightening or QT or balance sheet reduction at the same time if they're seeing signs of slowing growth. So pretty much the whole growth in factor is important. If we see that, if we see services PMI numbers come in, underperforming, then we definitely need to pay attention to Powell's press conference afterwards, because although we would get the 50 basis point rate hike, since the Fed doesn't want to ruin their credibility, we may see a dovish tone towards in the press conference where he sort of dials down on some of their I don't know, plans. It could be even on balance sheet reduction. It can be even on further 75 basis point rate hikes. It can be anything, but this is what's already priced in to the market, and it's already priced into the dollar. We saw just before the dollar was strongly, um, bullish because of it. It's been strongly parabolic, to the upside. So with that being the case, right now we just got to exercise caution, exercise patience. We know what could potentially happen if the Fed goes along with what's expected with the 50 basis point rate hike. We may see a continuation of risk trends to the upside. Just like we showed you, futures is underpinned. We saw risk assets moving to the upside. We may see stock markets gap higher. Let me just go to, we may see, stock markets move to the upside as the dollar weakens and as, it becomes a non-event. But, if we do see signs, or even within their statement or even in the press conference, if we do see signs or of them dialing down some of their hawkish tone, then we'll definitely see a sell-off and some risk aversion kick in the market, because that would mean that, with the higher rate expectation, with rates moving higher, that's going to cause people to sort of hedge themselves and sort of insulate themselves from the risk that comes with buying more, higher beta assets, or assets that are very sensitive to risk. So yeah, so then, if the Fed hikes by 50 basis point, we'll either see, it'll be either a non-event in equities, or we may see the equity market, continue to move to the upside, go along with business as usual. But if we see it sort of, if the Fed does talk down um, during the post announcement press conference, then we'll definitely see stocks sell off into the remainder of the session and through the close. So yeah, right now, markets have a little bit of reprieve. The U.S. dollar is weakening, and right now traders are choosing to buy assets. But of course, right now it's pretty illiquid. The markets, there's been a drainage of liquidity. This is still a holiday week, May Day in China, their particular Labor Day week, and there's some other holidays, across the market. But yeah, today's going to be an interesting day with a lot of volatility. So we need to pay attention to the services PMI data and also the Fed announcement, which comes out later in the U.S. afternoon, 2 p.m. Eastern time. So, but yeah, that's pretty much it. What I want to talk about. I don't want to hold you guys for too long, because I know that you guys, probably prefer more more setups. But yeah, before I go, let me just do this real quick, because I want to say we may not get 10 rate hikes, but there's a possibility that we could get, trying to see, where is it? Okay, yeah, there's a possibility that we may see right here 170 basis points rate hikes, which is about 6 to 7 hikes. So this is right here, this is the Fed funds, the difference between the current Fed funds future contract versus the December 2022 Fed funds future contract. And according to this, right now they're saying that we have 170 basis points left in the year to go. So then that only gives room to like 6 or 7 more rate hikes. So according to this chart, this is a little bit more realistic. Like instead of the Fed engaging in 10 rate hikes for 2022, there's a possibility that it may only be about 6 or 7. According to this particular spread between the current contract and the December 2022 contract, we're seeing only 170 basis points baked in or left. So then this is a little bit more realistic. So then, there's a possibility we may see this as well instead of the 10 rate hikes and us seeing the interest rate by the end of the year at 2.855%. That's where it's currently being priced in now. 2.85%, 2% interest rate from 0.75 all the way up to 2.85. But we may just see just 170 basis points added. So yeah, so then that's pretty much it. I don't want to just bore you guys any longer, but today is a risk appetite day. So then what you know to do is sell the safe haven, sell the dollar, buy risk assets, and but yeah, that's pretty much it. So yeah, I'm going to pass the mic back over to Melvin, and he's going to continue for the rest of the session.
Yeah, all right, guys. Yeah, I'm not going to be up here for too long, but I'm just going to share maybe a few things that you can be mindful about. But before we get to the new stuff, let me just share with you what we talked about on Monday. Remember, in the top-down analysis portion of the webinar, we talked about two pairs, Aussie CAD and pound Swiss franc. Both of those pairs are did or are doing what we planned or exactly what we thought they should do. But let's go to, of course, the 4-hour chart, and let's do Aussie CAD first, AUD, CAD. Let's go there first. Yeah, and as you can see, price did exactly what we were expecting it to do. And, of course, we saw a push to the upside, a break. Price came back, retested this area, really this trend line. And then now we see price pushing to the upside. And let me modify this right here. So then it's almost at the target right now. So, we'll see what happens. But as you can see, it did exactly what not exactly. It didn't get to this region exactly, but like we said in this circle, we mentioned how price could actually correct a little bit deeper into this area right here and then start pushing to the upside. So then that's exactly what happened. And if you need to see how to enter, let me go down to the 30-minute chart. Okay, so then right here we see that price gave us this move to the downside. It created this consolidation. Price pushed up, corrected, and right around here was where you should have looked to enter your buy. Now, at the time when this happened, I was already in a few positions. So then, I didn't want to overexpose myself, but, I should have told you guys about it, like as far as when to enter the trade, sent that to the group so that you would know exactly when to enter this position. But I didn't. And to be honest, I was in two positions that was actually correlated with this Aussie CAD, and those positions hit the target this morning. It was two good trades, but yeah, this is one that could have ended up being a great one because of the reward to risk ratio. So let's just say, okay, let me go back to the 4-hour again. Okay, so right here, we're assuming price may go up to this particular area, right around here, based on, what we know and just a measured move of this, consolidation pattern. Remember, for this one, we took it from the low all the way up to this neckline right here to the left. So then going back to this right here, we have this right here. So then going back to the 30-minute chart, if we would have entered this trade, and kept our stop loss, fairly small, which is, right at the lows or right below it right here. this could give us a nice 3.91 reward to risk ratio. But yeah, like I'm not in a position now. I hope you guys were able to get in. But I seen this happen, at the time that it was happening, but I didn't go in myself due to the fact that I was already in multiple positions, but I should have told you guys. For some reason I wasn't thinking about it. It didn't really cross my mind to let you guys know that price was testing this area and that you should have looked to buy right at that time. That was in the night, in the middle of the night in US time. So it just didn't cross my mind when it happened. But if you would have entered this trade, it definitely would have been a really, really good one. So yeah, this was the Aussie cat. And what else did we talk about? Going back to the 4-hour chart, we also talked about the pound Swiss franc. Right around here. And as you can see, that pretty much did what we, wanted it to do at the time. Price was giving us this correction, and, it didn't quite hit the level that we wanted it to hit. But as you can see, we did see a three-way pullback on this move higher. And we could have gotten in on even on the second attempt. But yeah, so in this case, we probably would have closed out once price hit this area right, right around here when it hit it the first time, which was really yesterday. Yeah, we would have closed out like right around here. Yeah, when it hit this zone right here. But let's see. Okay, if you go down to the 30-minute, you could see that, of course, price did create a three-way pullback. Leg A, leg B, leg C, and yeah, and it did give us the confirmation, a unique confirmation. I can't talk about it everything now for the sake of time, but it did give us bullish confirmation, and we did see price expand to the upside. But if you guys need help on the bullish confirmation portion, just let us know, because there's a few secrets to the trade that we haven't shared with quite a few people in the group. So if you guys really, really want to know the key secrets of entering trades and being more precise with your entries, just contact us privately, and then we'll definitely help you out with that. All right. So with that said, let's move on and let's go to the next topic at hand. Now, as you guys know, we do have that FOMC announcement coming out. So then I just want to share with you something that we've been noticing really for a while now. But I believe it's a good time for us to talk about this. But right here, we see that price gave us this nice expansion to the upside. If you was to, I believe it's a measure move. Let me see, from here to here, and let's drag this up to here, to this high right here. But yeah, it's almost a one-to-one measure move, you could say. So then, we can see here that price is moving harmonically, and sort of giving us this measured move, and we should expect a correction to the downside. But this happened at the perfect area, because price came to the 104 whole number level, you could say. Now let me make this white. But price came over to this particular level, and as you can see, it respected this area, and for the most part, price has been moving sideways, right? So then, since we see these sideways moving candles, what does that tell us? Let me see if you guys remember. We see these sideways moving candles right here, like ever since April 29th, and then May 2nd, May 3rd, and then today's May 4th. What do these sideways moving candles tell us? Let me see if you guys remember. If you don't, then that's fine, because we can definitely let you guys know. But yeah, just let us know. Like if you guys do know the answer. If not, then I'll just jump to it. I'm pretty sure you guys know it because I know we've been through this before, but I just want to make sure you guys remember what this is. Remember, this is sideways moving candles. This isn't what we typically see when price hits resistance, but we see something here. So then I know Rob said consolidation, yes, but it's more so consolidation on a smaller time frame. But this is what we're going to do. We already know that price right here is trapped in this consolidation right here. So what we can do is wait to see how price responds, because based on the announcement, price can either break to the upside or it can break to the downside based on that announcement that takes place. In other words, we can either see the dollar rally to the upside, come back, retest, and then push higher, or we could see price break to the downside, retest, and continue lower. Either of those two scenarios can take place. So that's something for you to bear in mind. But if you go down to the 4-hour chart, you'll be able to see exactly how everything is looking. Price is trapped in this range and this consolidation, and we need to wait for a breakdown or a breakout to the upside. Now, what I'm going to do right now is show you a few examples. So right here, we see this on the daily. Now, let me just see if we can add another window right here. We have our US dollar index here. But let's pick a few pairs. Let's go to the pound USD. Pound USD, you see on the daily, similar price action, right? Let me remove this stuff because we don't need this right now. We see similar price action, right? But instead of topping, or instead of sideways moving price action candles at resistance, we see sideways moving price action candles at support. Also, price is doing this near a institutional level as well, the $1.24 level. So, that's something for us to know. So then, even for the pound USD, we can wait for two things: either price to break to the downside or price to break to the upside. We're in this zone of indecision right now when it comes to these US dollar based pairs. Let's do the Aussie USD. Very, pretty much the same thing, but as you guys know, our range is a little bit higher. For this one, we have right here, and our low is right here. So it's still somewhat in a consolidation phase. Yep. So this is the Aussie USD. Price pushed to the upside, as we noted in the group. We were looking for a buy on Aussie USD. The first buy hit our stop loss, and then I actually entered this buy again, and as you guys know, it's pushing to the upside. But this is Aussie USD. Let's do US dollar Swiss franc. Okay, US dollar Swiss franc is a little bit different. We don't see the same sideways moving candles as we did with the other pairs, but let's do US dollar CAD. US dollar CAD, to some degree we do have it right here, but the low of this consolidation is right here. The high is up here where this resistance is right here. So then price could either break to the upside or break to the downside, but this one's a bit different. Let me show you. Okay, right here we have this trend line, and for me, if price breaks the trend line, that's when I'll start really considering having a bearish bias for this particular pair. But it's pretty obvious, even for this one. Let me see if this clone tool works again. Yeah, for some reason it's not working. Let me go down to the 15-minute. Yep, right here on the 15-minute. Let me for some reason it's not visible. We go hours. We go to the 4-hour. But yeah, we can drag this up to see, and yeah, we have this right here. So this could act as a range as well, but if price does break to the upside and it breaks above this trend line, then we definitely want to look for buy. So again, if we get a nice push up, break, retest, but if you get a breakdown below this trend line, we can wait for a retest of this trend line and then trade lower. So that's something that we can look at. Also, there's a possibility for price to respect this trend line and maintain this ascending channel to the upside. But yeah, I just wanted to show you exactly what we were looking for on these pairs. As you guys know, pound USD prices bottoming. I was going to get in right around here at this low, enter a buy, but I decided not to for the sake of that announcement. But I wanted to show you the fact that even on pound USD, we see multiple patterns within a pattern. Not only do we see what we could consider, well, let me ask you guys this question. What classical chart patterns do you see that could hint to a move to the upside? I'll let you answer based on what we see on this pound USD to the right. I'll give you guys a few seconds to chime in. Yep. Okay. Yep. All right. Okay. So yeah, I know Rap said bull flag, inverted head and shoulders, and that's exactly what we see in this chart. We see left shoulder, head, right shoulder, but we also see this bullish flag pattern right here. Let me move this. We see that price form this flag, and of course we have the flag pole right here. And if you clone this line and drag this all the way down here, we can see that price is creating this bullish flag pattern as well. So then we have a pattern within a pattern. So what we can look for is something like this: price push up, pull back, and then continue climbing to the upside. That's something that we can definitely look forward to on pound USD. But yeah, in regards to these top-down analysis setups, that's all that I have for you guys for this morning. The most simplest one is the Aussie USD. We can just simply look for that inverted head and shoulders pattern, or in this case, we do have a violation of this trend line. But if we can get a break above this area and then a retest, that'll be good. Yeah, that'll be good if you can see something like that. But yeah, you guys get the point. But yeah, I'll let you guys know what we decide to do for these. But this is what I'm expecting to happen, something like this, and push to the upside. So we'll see. But yeah, that's pretty much it. I don't have too much more to share with you guys. I know some of you guys are gold traders, so let me see how gold is moving. It could be moving somewhat similar to what we're seeing here. It's definitely responding to support, consolidating somewhat, but it had this huge nice sell-off prior to this consolidation. So of course, let me do this on the main one. Let me go to XAU-USD, and we can see here that price expanded to the upside. We didn't get the what we was expecting. We were expecting for price to break to the upside, come pull back, and then push higher. But as you guys know, the dollar kept gaining strength, and we did not get that. So you know, of course, price kept sliding to the downside. And if you look at this right now, this looks like it's a measured move to the downside. Let me drop this here and put this right here. So yeah, it's almost, you know, pretty much a measured move to the downside. Price could still give us a bit more of a push to the downside, but you know, pretty soon we're expecting price to rotate and push higher. If you look left, we do have price encountering this area of structure, you know, right around here. Let me drop the line right around here, the midpoint of this congestion area right here. Let me down a little bit more, or yeah, well, right here is fine. But we do see price responding to this particular level. So then there is that possibility for price to expand and continue climbing higher, you know, in this example. But we'll see, you know, only time will tell. But yeah, that's pretty much it. I don't really have too much more to share with you guys this morning. Let's just see how price moves after this announcement. For the most part, I'm pretty much done for the day, even though we are looking at Aussie Swiss Franc. As a matter of fact, let's go there right quick to see how that is before we call it quits for today. Let's go to the Aussie Swiss Franc. And yeah, price keeps pushing to the upside. So we're definitely not going to get an opportunity to enter that one. Euro Swiss Franc, pretty much the same thing. So but yeah. All right. That's it for today. Thanks so much for coming. And like we say at the end of every single meeting, remember to always count your blessings, not your pips. And we will definitely see you guys soon. Stay encouraged, stay blessed. And yeah, we'll definitely talk to you guys later. All right. Talk to you guys later. All right. Okay, then bye.